Hi everyone, I'm Brooks Lohr, agent at Remax Team and one of the top agents in Johnstown, Pennsylvania. I hear a lot of questions about mortgages, refinancing, and what loan options are out there right now. So I thought the best thing to do was to sit down with a local lender and get you some answers. Enjoy.
Lynn, you know as well as I do, the first step in purchasing a home is getting approved for a mortgage. One thing I like about First Commonwealth is your secure online portal that you enable buyers to use. Can you explain a little bit more of what that looks like and maybe what documents buyers will need to upload?
When I first talk to a borrower, I like to ask them what kind of money they have to work with, how they think their credit is, and we send them the link, which is a secure portal. We also have the availability to do a soft credit pull. So until they would find a house, it doesn't hit their credit that hard. And then we're going to be looking for 2 pay stubs, so 1 month pay stubs, 2 years W-2s, 2 months bank statements. And then if you're self-employed, we're going to need to look at 2 years tax returns.
Can you explain the difference between a soft credit pull and a hard credit pull?
The soft credit pull basically pulls the same information as a hard credit pull, but it doesn't affect the score. And it would also show us ways to even increase a borrower's score with a payoff, a pay down of some debt. So it's a good way to start if you really don't have a house in mind and you're looking to just see what you can do in the future.
And I always recommend to clients touch base with the lender so they can take a look into things, because your CreditWise app might tell you one thing, your Credit Karma might tell you another. Do you see a big discrepancy sometimes in what scores a buyer can see for themselves and then what scores are pulled from your end?
I do. Some of the credit apps use different scales than the mortgage credit pull. So we do see um, the scores show a little higher on their credit apps than what we see, sometimes a little lower. So it's good to talk to a lender, get a baseline of where your credit actually is so you know what you're dealing with.
Yeah, because you might have a higher credit score than you think and might be ready to go. Or if it's lower, now we can at least make a game plan to, hey, how do we raise this? What steps do we need to
That's right.
take? Let's get you qualified and let's get you into a house. What kind of credit score are you looking for a conventional loan? What's the difference between that and the credit score for FHA, VA?
Credit scores play a big role in what product that we can actually do for a customer. I would say in the 600 range, we're looking at an FHA loan for you. USDA, we like you to be in the 620 to 640. And USDA is really the 100% financing for the rural borrowers. To get the best rate out there, you're looking on a conventional loan, 740 credit score. And you do get a little break if you're a first-time home buyer. So the rate's a little bit lower for first-time home buyers.
What kind of products does First Commonwealth offer for first-time home buyers?
So first-time home buyers, we have 11 investors that we can shop. We have USDA, FHA, VA. We have some first-time home buyer products that are actually portfolio products. So we hold those in-house and can get a little bit more creative on credit score, income, and just to help put people in houses.
And does that come with maybe some lower closing cost or closing cost assistance from First Commonwealth?
We do have some grant money out there. There's also the First Front Door that we partner with. That's through the Federal Home Loan Bank in Pittsburgh. That's going to come out here soon in May. And that's a $15,000 grant to help people with down payment and closing costs.
That's a lot of money.
Yep, there are some income limits, but if you qualify, it really has put some people that didn't think they could buy into some houses.
What does the income limit look like for that? I know maybe you don't have those numbers for this year yet, but maybe based off last year's income limits?
I mean, for a single person household, last year was in the 58,000
Okay.
range. And they do look at household income. So it's going to be if it's you and a boyfriend, if you're married, if you have kids, it's going to take into all that income into consideration.
And is there any specific areas that grant will work for, or maybe that grant won't work for?
It pairs with all the loan programs and any area that you'd want to borrow in.
Lynn, one thing I want to talk about is the difference between an inspection and appraisal, right? Because I think some buyers, especially maybe first-time home buyers, get those confused. And it's my job to explain that, which I do. And I think you help explain that as well. Essentially, in short terms, inspections hired by the buyer, third-party service to inspect the home based on any contingencies or inspections that that buyer has elected in the contract. And can you explain a little bit of what the appraisal process looks like from the bank side?
The appraisal is part of the loan process, and that's actually a third party also. So a lot of people think that it's a bank appraisal. It comes from a third party panel, and we rotate through a list. So when you come in to apply, your loan goes to underwriting and the appraisal gets ordered at the same time. So you actually would get a credit approval, and then we'd be waiting on the appraisal to come back. And that's looking for value, sometimes some health and safety issues.
Lynn, one of the problems I would say that has affected some buyers in the past couple years are those that are needing to sell in order to upgrade to their next home and use the money from that house to use as down payment, closing costs. And them having a sell and settlement contingency kind of puts them behind the eight ball a little bit during a competitive offer situation when other offers may not have those contingencies. What advantages do you have as a lender or First Commonwealth that can help those buyers out?
Well, First Commonwealth does offer a bridge loan. And what that does is that you can take advantage of the equity in your house before selling. So we'll go to 80% of the value of the house. We're actually going to pay off your first lien and then give you anything left over to put as a down payment and closing costs on the new house. We don't require you to make a payment until the house is sold.
Okay.
And we're looking at this as like an 11-month product. So we're basically giving you 11 months.
You have 11 months to sell your house.
Right. You are going to have 2 payments.
Right.
But it does give you the ability to buy and move without selling your house.
And then for those looking into a bridge loan, how long would that process take for them to get qualified for that money?
We like to start the bridge loan when you start the mortgage process. They kind of go hand in hand. So, and you're listing your house for sale probably during that process too. So if the house would sell, you wouldn't need the bridge loan. But they go simultaneously, so the money's there to close in 30 to 45 days.
And then the house they currently own, do you do an appraisal on that?
Right.
And that's how you determine 80% of the value?
We would do a current appraisal and then minus what you owe. And then, we're giving you a little cushion just in case, there's a fluctuation in the market or whatever.
After securing a property with my buyers, I say, hey, now that we're under contract, we're going to be working towards getting your loan closed. Don't go opening up a new line of credit at a furniture store so you can buy $10,000 worth of furniture. Don't get a new car. Don't go buy a bunch of appliances on credit. If you want to do any of that, run it by your lender first. So Lynn, what are some mistakes that you see buyers making in today's market?
No, we appreciate that when realtors tell the customers, hey, just rest.
Yeah.
Let your finances rest. Let your bank account rest. Don't move money around to 4 different places. Don't put a big deposit of cash in your account. Don't open up any new debt. Because we do monitor, it's during the process where if they do open up new debt, it notifies us. That could actually affect an approval, especially if the debt ratio is a little tight. If they bought a washer, dryer, I mean, that could take them out of buying a house.
Open up a $5,000 Lowe's credit card because they get 24-month financing.
That's right.
There you go.
That's right.
Can you think of any instance where a deal fell apart, the week before, the day of, from an instance like somebody buying a vehicle?
We actually have one right now where we're getting ready to go into underwriting and he just bought a new car. So we're trying to scramble to see if we could put more money down or pay something else off.
And now you might have to change the loan type. Maybe he was conventional, she was conventional. Now you got to go to FHA.
That's right.
That it changes the appraisal process, the closing cost fees. I mean,
the contract.
That changes everything.
It does.
these rates being lowered, I know one of my past clients that you and I worked with, you had actually reached out to them maybe in the past month or so, and were able to refinance a loan that they got, I believe, in early 2024. So, who's an ideal candidate right now to maybe look into refinancing?
Right now, if you have maybe some debt to consolidate and you have a little bit of equity, or if you want to reduce your term, maybe from a 30 to a 15, you bought and now got a promotion at work. Like this might be a good time to look at refinancing. There's also some streamlined refinances for FHA, VA, where the costs are a little lower, and that might be something to look at too.
Is there a general rule of thumb maybe of when somebody should look to refinance?
I mean, rule of thumb is typically like 1.5 to 2 points from where you
Okay.
started or where you purchased.